This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy, Camel. And today I want to talk about CPI and a controlled demolition. This has been a theory of mine for a long time. A lot of people said we're never getting deflation. A lot of people said that they didn't believe the Fed was orchestrating a controlled demolition. They believe it's incompetence or some other factor. Maybe they just believe it's totally wrong. But I've been very, very steadfast in saying that I believe they are orchestrating a controlled demolition to usher in CBDCs, and that when you expand the monetary supply as rapidly as we did during the C19 era, it has to, and I do mean has to, snap back into a short period of asset price deflation. Now, a lot of people have had problems with this, but when we fast forward today, which by the way is close to, 2.5, 3 years since I first proposed this idea, based on everything I'm looking at, I am right about this. And this is not about me being able to say I'm right or I told you so. It's about me doing what I always intended to do when I first created this channel 3 years ago, which was warn people we were going to have a blow off top and come tumbling down in a global recession and global bear market, and that bear market would have a deflationary component, and that all of this was being deliberately orchestrated in a controlled demolition by the Fed to usher in CBDCs. So I am literally saying the same thing that I've been saying the entire 3 years I've had this channel, and we have so far seemingly completed that blow off top. And now, as far as I can tell, we are rapidly heading towards deflation and what I believe is a controlled demolition. So I want to show you this today. And for a long time, it was quite easy to point at short-term wobbles in inflation. And people were very quick to say, see, Camel, inflation's creeping up, right? No way you're getting deflation and how and all of this stuff. But the reality is, we are closer to deflation now than we have been in a very, very, very long time. And this is not an opinion. This is not up for debate. This is not conjecture. This is absolute fact. And that's why I want to present this today. I want to show you just how factually we are heading towards deflation. And it doesn't matter what anyone else says or thinks or does, because you cannot argue with the data. The data is the data, and that's what I want to present today. After we've done that, I also want to deviate away and look at the dollar chart, because I have to invalidate my yellow squiggles on the dollar chart. I think we've got a new idea, and that the cycle lows are also synced up for the Dixie now on that 7th of May timeframe. So I'm going to show you that. There's a couple of other random tabs thrown in for bonus content. So please do hit that subscribe button. Please continue to follow along, and please consider what I said as objectively as possible. For anyone that hasn't been to camelfinance.co.uk yet and tried out the indicator, the Discord clone, the educational content, please try it, okay? Or go to my profile on Twitter, scroll down a bit and read the reviews. Many people rated this thing a 5, and the most common piece of feedback we got was that we wanted alerts in TradingView for when the cycle low indicator flashes, and I'm not sure if this is officially released yet, but it's coming incredibly soon. Okay, so I'm also going to be using those alerts to start the DCA for gold, and I'm even thinking about starting a DCA for Bitcoin, a hodl forever stack. Not really my style, but I think maybe it would be a nice illustration to show you the power of essentially buying the top, DCAing for a good few years, and then by the time we get to 2030, I bet that will be quite a nice stack, I would think, at least in terms of debased dollar value. So anyway, if you haven't been there, go and try it out for free. Alerts are coming very, very soon, next few days, I would think. So the CPI came out yesterday, and you can pause your screen and take a good look at this. The too long didn't read is it was cold, okay? And that, of course, is to be expected, especially if you've been part of the Camel Crew. I've got a couple of nice visuals here for you. Core CPI inflation just fell below 3% for the first time since March 2021. So take a look at this. We are well on our way towards that short period of asset price deflation. And another very, very nice visualization here, okay? The US core CPI year-over-year change. Take a look at that, okay? So there is possibly still time to get some relief, at least. There may even be time for some new highs. I'll believe that when I see it. But for now, things are still going according to plan, at least pertaining to inflation. I do wonder, actually, how the rate cut situation is responding to this drop in inflation. And again, we continue to bounce around. I think we were at 80 yesterday. We were at 50-50 the day before, now back to 60-40. But again, expect a bunch of volatility, expect the yields again to do a bunch of chop and volatility, and expect ultimately this thing to slowly start to reprice this way. I really hope we do get to see a cut in May's meeting, but if we don't, we are certainly not getting out of June without seeing a cut, in my humble opinion. I really think that this should be a May cut on the table, but I'm not going to suggest that I know better than Powell or the bond market in aggregate, which of course is what controls the interest rate policy. For more of a deep dive on the CPI, both headline and core came in below consensus estimates. Headline CPI actually came in at negative 0.05% month over month, which is the first monthly deflation since July 22, and the coolest month over month read since May 2020, which of course was essentially the last recession during that C19 crash. On a year-over-year basis, headline CPI tumbled 43 bips to the lowest level since February 21, and this is also the largest monthly drop in inflation in 17 months. Again, that makes total sense if you think about it, because that trueflation at the hard right edge has looked like this for some time now. And here's the most important part of all. This means CPI inflation is now below the levels desired by the Fed. And that's because we have to keep in mind the key detail, which is the Fed is targeting 2% headline PCE inflation, not 2% CPI. And in fact, a 2% CPI would be too low for the Fed. Historically, remember, around 2.5% CPI corresponds with 2% PCE. And keep in mind that CPI is actually an extremely lagging indicator because of various components that have significant lags, such as shelter. Which of course means by the time the CPI falls into the Fed's target, the Fed is going to be far too late behind the curve. And this is why I've been telling you over and over again that snapback in the M2 rate of change will, because it was so violent to the upside as a result of the printing in the C19 era, result to a violent snapback to the other side, which of course will manifest ultimately as a short period of asset price deflation. You cannot expand the money supply at the extreme rate that we saw during the C19 era without having that snapback to deflation. As for core, it came in plus 0.06 month over month, which is the coolest since Jan 2021. Year over year, it stumbled 33 bips, which is the weakest print since March 2021. And whilst core CPI is still a little bit above the desired levels, it's not above by much, only about 26 bips away. So take a look at this, at the hard right edge. And this is another reason that the Fed's monetary policy is overly restrictive, at least according to me. Take a look at CPI shelter in blue, okay? Significantly above the ALNRI, which is in red, and has been deflationary for about a year and a half, right? This is how far behind the curve they are. When we don't use lagging metrics, shelter, which is the biggest lagging component, is already deflationary for a year and a half. What do you think is going to happen to this? Okay, we're going to be stuck down there for a while. And if we were to substitute the shelter component in the CPI basket, which lags, with this ALNRI, what we get for both headline and core is they're already below 1%. Okay, which means trueflation is actually ambitious to the upside. Normally, trueflation overestimates to the downside. But if we swap in this component, as I said, it's already below the trueflation print. Trueflation is actually being generous here relative to what the real life numbers are. So we're not quite in deflation yet, but we're not too far either. Again, okay, the trend is down, the trend is strong, and you do not want to be betting against this trend at the moment. Both me and Marco here agree that the Fed should cut rates immediately to try and position themselves closer to the curve. Are they going to continue to be stubborn? I think they probably are. And this is why I keep saying over and over again that this whole thing smells like a controlled demolition to me. I think they're doing this on purpose. I really do. Because I don't believe this is incompetence. I also recently saw Jerome Powell sitting on stage and somebody asked him about tariffs. And he said, well, tariffs are essentially inflationary, right? There's no way the chair of the Fed agrees with that statement. There's people on TikTok with more macro knowledge than that, okay? And again, this is why I keep maintaining that he's not incompetent, okay? He's misleading and deceiving the public. Anyway, I don't want to go on a rant and start putting Jay Powell on blast. If inflation continues to move lower or it doesn't go up from here on a month-over-month basis, then we are going to be looking at deflationary risk. I think we're already there. They're already too far behind the curve. They're already being too stubborn. You see all this narrative out there, DT wants rates down and America wants rates down so it can refinance the debt, and China's, dumping the treasuries to keep the yields high to try and force bankruptcies and all of this. But the reality is, okay, the Fed could have easily cut rates. It could have done it multiple times already. Rates could be 100 bips below where they are right now, okay? And they're not. Why? I maintain it's because they are organising a controlled demolition. I maintain that they are signalling this in plain sight to the world, because every time the president comes out and says, I want rates down and he should cut rates immediately, he's so dismissive. He treats him like he's just some average Joe on Twitter, right? He doesn't treat him like he's the president, like this guy has any power or jurisdiction over him. He's just utterly flippant and dismissive of him. He's like, yeah, whatever, kid, right? Get out of here. I'll cut rates when I'm ready. That's how he acts. And they're doing this in plain sight in front of everyone. There's so many people out there that are talking about how DT wants the rates down and Jay Powell's going to bend the knee. It's the total opposite way around, right? DT bends the knee to Jay Powell, and that's been made abundantly clear multiple times to anyone with eyes in their head that cares to look around and watch. And again, this is why I maintain this thing is a controlled demolition. We have got a president that can't even impact interest rates. Markets can't even have a conversation with the chair of the Federal Reserve. And that is because the power structure really is not president above central bank, is it? It's the other way around. So deflation remains the risk. And I maintain that deflation is a controlled demolition to usher in CBDCs. So too long didn't read. Will we see rate cuts? Well, we might. We might. I hope we do. I really, really, really hope we do. But based on the historical performance of this Fed chair, it seems like he's probably going to dig his heels in. I can at least say we're not getting out of June without a rate cut, but I guess time will tell about that. And ultimately, I do think we're going to be able to look back at this as either the largest Fed blunder in history or a controlled demolition. I don't think it really matters. The outcome is the same, okay? Whether you want to be on one side of that argument or the other, it doesn't really matter. You can call it incompetence, you can call it deliberate, but the outcome is the same, right? And that is indeed a demolition. Something we see here is we're starting to see these kind of tit-for-tat tariffs and, oh, we'll drop ours if you drop yours, and, oh, maybe we can negotiate. I continue to maintain that whilst the cycles are down, these tariffs are going to be slowly but surely worked out. Slowly but surely we're going to end up with significantly less tariff numbers, percentages that we've got at the moment. Over time, slowly but surely, things are going to kind of work themselves out into those cycle lows, and then we'll probably get some big kind of narrative that shows up out of those cycle lows to explain away the upside price action, as we always do. Whether it will be cancellation of tariffs, more pauses, who knows what it will be. But we do know by the time we get to those cycle lows, it will be ready to see some rallies. Also, a bunch of you were tagging me in this. Congress should maybe be banned from owning stocks, according to Elizabeth Warren. For anyone that doesn't know, this has been the idea the whole time, that they will probably let themselves out of the top, just like they did with the Fed officials back here. As ever though, they have a long history of saying this and not actually doing it, so we'll believe it when we see it. But what will be quite interesting is if we can get some kind of big relief here, maybe even to new highs, or even to lower highs, and then this occurs, then for me, that will be absolute confirmation that we need to run for the hills. So anyway, one day at a time. So far, we're right back and bouncing off of the first angle, by the way. So that's something we'll talk about in the weekend's deep dive. And then before we do some TA, I show you the Dixie, because the Dixie is really important before we run through Bitcoin, because Bitcoin is holding up okay, right? And of course, we'll still aim at those cycle lows. I wanted to kind of troll some of the trolls here briefly. This guy says, I don't think ETH is ever going to trade above 22 to 2,500 again, regardless of how high Bitcoin is. And I said, look, I agree. It's a straight line to zero from here, right? And a lot of people get really upset with this. They really, really do. The yellow squiggle. But just so you know, everyone that got mad at this squiggle, okay, so far the squiggle's in play, okay? It's in play. So there's a clear invalidation for this. If we get a breakout here, this downward slope in red, fine, okay? Then I think you can say, ha, told you so, Camel, ETH to the moon, okay? And I know a lot of people are very, very bullish here, but with respect, they have been bullish the entire time, and this has been the overall performance. So it was half a joke when I posted the yellow squiggle, but also it does make a lot of sense if you really, really think about it. Since Bitcoin's bear market low, I doubt anyone really thought that we would get this late in the 4-year cycle and be up somewhere around 44%, okay, from that bear market low. From that, I know Ethereum bottomed first, but even from that ultimate bottom, 72%, right? I don't think anyone thought we would be here. So once more, if you're going to be bullish on Ethereum, that's absolutely fine, but you probably better wait for a downward sloping red resistance line break. Now, let's go on to the dollar, because I want to show you that. I think the dollar is the most interesting thing out there at the moment. I was thinking before that we should get a weekly cycle in here and a breakout, but notice how it did not confirm, right? Which says to me that the weekly cycle low is still not yet in, and we can see this very clearly if we go onto a weekly time frame, all right? You can see this. Weekly swing, weekly swing, weekly swing. What have we got here? That is not a weekly swing. It never confirmed with a breakout, which means my expectation that we would form the weekly cycle low on this daily cycle was wrong. We're still clearly in the middle of forming it and have yet to confirm a weekly cycle low swing, which suggests to me that we're going to need another daily cycle here, right, of downtrend before we can actually go. Now notice if I zoom in on this and we pull out 24 days, right, 23 days, where does that land us? Right into that Wednesday, 7th of May timeframe, right? Now, 22, 24, something like that, pretty average for the Dixie, which does make me wonder if either this yellow squiggle's got to occur from here, or if maybe we just invalidated or at least significantly delayed this deflation rip. Maybe we dodged a bullet here and we weren't going full deflation yet. And instead what we're going to get is a big weekly cycle push, one final decline, maybe into the end of the year, which will allow Bitcoin and the stocks to have their final blow off move. And then we go deflationary bear market from kind of this October-ish time frame, right? Maybe this is what comes thereafter. But I think it's pretty safe to say that the squiggle, which was extremely contrarian back here, did really well for a while. We then deviated away, and I said, that's fine, as long as we find a weekly cycle low soon. But we clearly haven't found one, and also, we've retraced this entire move, haven't we? We've retraced the entire move. We're now sub 100. So some kind of relief bounce here makes a lot of sense, and that's simply because the weekly cycle low swing will come into play. And there's clearly no sign of it yet. But despite this thing being right since September, right? This was right for 6 or so months. I do think we have to say right now that this is not in play anymore. It certainly doesn't look anything like that. So we'll get rid of this. I don't know if we should leave this here. I mean, from a cycle perspective, this is absolutely correct. So we'll leave this here and see what happens. And if somehow this is just going to fall off of a cliff and force a very, very late and overextended weekly cycle low, right? If this is somehow going to do something like this, which would be rare for cycles but not impossible, then I would imagine every bear in Bitcoin is super wrong. So, I mean, I say it all the time, I'll say it again. Nobody wants to see this more than me, okay? But just as a cycle trader, just looking at the weekly swing, there is no weekly swing, there is no weekly cycle. If we put it back on the weekly cycle here and then turn this on, you can see that, you know, nowhere close to confirming a new weekly swing yet. So could be some more downside. Maybe it extends by another couple of daily cycles, produces a really late, I don't know, 82 handle or something. Maybe it looks a bit more like this. So yeah, maybe we're going to get a bit more downside like this and get rid of this blue arrow. Okay, maybe we just get really overextended spill, weekly cycle swing, and then from there we go full deflationary crash, right? Maybe that's the case, I don't know. That would certainly give us enough time in the weekly cycle for Bitcoin to do its double into its top, right? That would make a lot of sense as well. So everything and anything is on the table at the moment. The highest probability outcome is this for a weekly cycle, so I'm going to stick with this for now. But as you can see, there's clearly no trendline break, there's clearly no weekly cycle low swing, there's clearly no DSS Brexit cross, and I also think it's fair to say that the remainder of this squiggle is probably not happening, at least not until we've found a weekly cycle low, and more probable than that, maybe not until even at least in the middle of the year. So we'll redraw the squiggle when we got a bit more clarity. For now, we'll leave it at this, and I think we'll keep taking it one day at a time. But there's the Dixie for you. We'll see how it goes. Stock market, as expected, is still, roughly speaking, chopping around underneath resistance, looking for another low. The big question is this going to be a lower low, right? Something like this, lower low and go. Or are we going to produce a higher low here? Because I think that would be extremely bullish if we do that. If we produce a lower low, then the base case is still going to be that lower high, roll over and go. But as ever, one day at a time, and as ever, the cycles are in control, right? We are extremely unlikely to be getting any more significant breakouts or relief from here until enough time has elapsed to find that cycle low. Gold continues to rip. I do wonder if we're going to get some kind of pullback like this and then go. It looks an awful lot to me like it's setting up for a blow-off top move. I'm noticing the miners as well. We're positioned for these in the members section after this weekly swing low pattern formed. And this thing is now getting ready to start to moon as well. So I'm really, really glad that we're at least taking part in this rally via the miners and miner ETFs as well. Again, similar deal, weekly cycle low swing got in here, and now this thing's ripping. Silver is still lagging, and silver is actually behaving a lot more reasonably for what is expected based on where we are in the weekly cycle. So I think what we're going to get is a rejection at resistance, another rollover, and then go. But gold, again, continues to diverge away. So we'll see what happens here. Again, can't really lose since we've got a whole heap of miners in the members section. And last but not least, Bitcoin. So Bitcoin, I still see people showing up in my comments every single day to write the same comment. And that's something along the lines of, it has to go to 73K Camel and then we can go. Or it has to go to 65K Camel and then we can go. We will not be finding a low before we get to whatever the made up number is, right? But so far, it's still doing the exact same thing as it did back here. This is still very much in play. This kind of tells us that the low may either already be in, or maybe you can hope for a slightly marginal lower low. But again, I maintain that too many people want to buy this dip in here. Far too many people. And I just don't think they're going to get it. I think it's far more painful for the majority of market participants to just come back to some unlogical level, right? A slightly higher low, and then start to rip to the upside. One thing I do know for sure, I really, really hope the rally is more violent than this. I really, really hope that it looks a lot more like this. But time will tell as always. I hope you'll come back and check out the weekend's deep dive tomorrow. And until next time, I'm your boy Camel. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel